Asian markets rose, shrugging off a sell-off led by technology stocks on Wall Street. Bangkok. Asian shares were mostly higher Friday after a historic plunge in the stock price of Facebook's parent company helped yank other tech stocks lower on Wall Street. Hong Kong's Hang Seng HSI jumped 2.7% after reopening from Lunar New Year holidays. The Nikkei 225 JP in Tokyo edged 0.1% higher, while South Korea's Kospi KR 180721 advanced 0.8%. In Sydney, the SP/ASX 200 AU PEX-JO declined 0.1%. Benchmark indexes in Singapore SGH-STI, Malaysia MYEFBM KLCI, and Indonesia ID JAKIX advanced. Shanghai remained closed for the Lunar New Year holiday. Trading has been muted this week, with Chinese markets closed and coronavirus cases still surging in Asia, especially in Japan and Hong Kong. Thursday's retreat in New York ended a 4-day winning streak for the market. The 26.4% wipeout by Meta Platforms FB, as Facebook's owner is now known, erased more than $230 billion in market value, easily the biggest one-day loss in history for a U.S. company. The stocks of other social media companies, including Twitter and Snap, also fell. Because Meta is valued so highly, a big swing in its stock price can also sink or lift broader market indexes. The SP 500 SPX fell 2.4%, its biggest drop in nearly a year, to 4,477.44. The tech-focused Nasdaq Composite Comp gave up 3.7%, its biggest loss since September 2020, closing at 13,878.82. The Dow Jones Industrial Average DJIA, which does not include Meta Platforms, fell 1.5% to 35,111.16. Snap soared 54% and Pinterest pins vaulted 28% in aftermarket trading after each reported better-than-expected result. Amazon.com AMZN jumped 14% in after-hours trading after reporting strong fourth-quarter results. Despite supply chain snag, big technology and communications companies played a big role in driving gains for the broader market throughout the pandemic and much of the recovery in 2021. But investors have been shifting money in expectation of rising interest rates, which makes shares in high-flying tech companies and other expensive growth stocks relatively less attractive. Investors are watching for the latest update on the recovering U.S. jobs market. The Labor Department will release its monthly report for January on Friday. Bond yields rose sharply on Thursday. The yield on the 10-year Treasury note, which is used as a benchmark to set interest rates on mortgages and many other kinds of loans, rose to 1.84% from 1.76% late Wednesday. The Federal Reserve is planning its first interest rate hike in March, aiming to tamp down inflation that has surged to 40-year highs. Those higher costs will likely persist until supply chains loosen and help ease costs for businesses and perhaps lower prices for consumers. Wall Street's major indexes are still on track for weekly gains, helped by strong earnings reports from companies like Apple AAPL, Exxon XOM, UPS, and Google's parent Alphabet GOOGLGOOG. In other trading, U.S. benchmark crude oil CLH22 picked up 56 cents to $90.83 per gallon, after surging $2.01 to $90.27 per gallon on Thursday. Brent crude BRNJ22, the basis for pricing international oils, added 39 cents to $91.50 per gallon. The US dollar USD/JPY slipped to 114.95 Japanese yen, from 114.96 yen late Thursday.